And I remember seeing that news and just being so impressed and so excited for the ecosystem because, I think, I was like, this is what we need. We need women moving into high power positions who are going to be writing checks. And it's really amazing to see the impact you've had in the industry already in that short time. So anyway, little fangirl moment over here because I've been following your career from afar. I'm going to introduce Vanessa in just a second. We're going to sing her accolades. As I do so, please introduce yourselves in the chat. These events are always more interesting when we get a sense of who's in the room, what types of companies, whether you're a founder, investor, something else. There's a lot of things outside of being founders and investors. And we'll get a sense for who's in the room. So Vanessa Larco is a partner at NEA and New Enterprise Associates. She focuses on investing in enterprise and consumer technology. And we'll get to dig in a little bit more on what that means later. Before that, she was a product person and led product management teams at Box, and also has a gaming background. I was excited to see this. And I think prescient in your career a little bit to have a speech recognition focus in your time at Microsoft, like knowing that was going to be so important for how our world works today. And in her investing career, she's led investments at Cleo, Rocket.Chat, Mejuri, EvidentID. This is a long list. We're going to ask you to name your favorite in a little bit, so get ready. Lots of great companies, and I think probably one that everyone here will know, Robinhood. So we'll be excited to dig in more on your investing history in a little bit. So with that, a round of applause for Vanessa. Thank you so much for being with us, Vanessa.
Thanks for having me.
Yeah. So to kick things off, I think a lot of people know it's really difficult to get a role in, in a major firm, but also just in a VC in general. So what was your path to becoming an investor, and how did you kind of get able to secure this impressive position at NEA?
I wish I could say that I planned on it or worked really hard towards it, but I didn't. I actually never wanted to go into venture. I didn't have the best perception of VCs. To me, they were just like ultra bros riding around in fast cars with vests and making all kinds of uninformed product recommendations. And so I just didn't have an interest in joining that clan. I'd been in product my whole career. I love building product, launching products, building teams. And so that's what I wanted to do with my career in the long term. My dream was to be a chief product officer or be CEO, a founder of a company. But I'd known the folks at NEA forever. One of them invested in my brother's startup, and I got to know him through that process. And when they were doing diligence on companies that I was familiar with, they'd call me. When I was trying to figure out what companies to join, I would call them. And so it was this very mutually beneficial relationship we had, but it had grown over the years and it became more involved, but never did I think I would join. And then about 3 years into Box, this partner reached out, wanted to catch up. I'd just done a big product launch at Box, and he was like, "What are you going to do next?" I'm like, "Man, everybody's asking me that. I have no idea." And I was getting feedback from all my mentors about like opportunities I had at Box, opportunities I was looking at outside of Box, and nothing really felt like I was going to stretch. Like the role at Box I'd taken was like a big risk. We were going to redesign and refactor the whole code base. It was to split the monolith. It failed a bunch of times. The team was about to quit. So it was like, okay, I'm either going to succeed or fail. There's like a very high likelihood I'm going to fail. This feels like a good learning opportunity. But all the other things that were now on the table for my next, role or venture at Box, it was kind of more of the same. Outside of Box, it was stuff I'd already done before. Mm-hmm. And so I was really uninspired about the next few years of my career, and I'm kind of just confused. And so he was like, "You need to meet more people. You need to meet some founders. You need to maybe expand the idea of maybe you do product and something else." Mm-hmm. I was like, "That's a great idea." And so they introduced me to a bunch of people. at NEA, and then more people at NEA. And I was like,
You're like, I see what's happening here.
no, I didn't. I was so naive. I was like, okay, well, maybe they're all vetting me before they introduce me to their CEOs. So like, I'll play along. But this went on for months and I started getting really annoyed. I was like, okay, I don't have time to just like go to dinner with you people all the time. And so they called me. This is like 9 months of just talking to people. And they were like, hey, you should join us. And I'm like, oh, for what? Like dinner again? No, join NEA. And I was like, to build products? And they're like, no, to be an investor. And I laughed. I was like, I'm not an investor. I'm a product person. I build things. I don't know how to use Excel without a mouse. And they were like, no, we think you'd actually be decent at this job. And I wasn't sure. So I shadowed a bunch of folks at NEA in the evenings after I'd left work for a few weeks, and then realized that it is a really interesting job. I was going to learn a ton. I liked the people a lot. Their values aligned very closely with my values, which is really important to me. And so I thought, you know what, I'll give this like a 2-year effort, see where it goes, and then probably start my own company again, now that I know how these VC people think. And then, 5.5 years later, I'm still here. So it was a very bizarre path into venture. I never saw it coming. And I kind of feel like I just got lucky.
Well, it sounds like you did some serious vetting of what it would look like to join before, even though you maybe weren't fully aware that that's what you were doing. I mean, like they were vetting you and you were vetting them. At some point, if you'd been like, no, I don't like these people, you probably would have just.
Well, I think the fascinating part was there's some things I look back on my career. So I started a company and it didn't work out. We pivoted a bunch and got acqui-hired. And to me, I was like, oh, a stain on my resume. And then to NEA, they were like, you were a founder that failed. That's so interesting. And I'm like, come again? You think that's interesting? Like what? And so all of the experiences I had in the past that I thought were like a zigzag path that weren't exactly like up and to the right, ended up mattering and being something useful in this role. So I thought that was one of the most interesting things when I made the jump into venture.
Yeah. Well, and probably very important to the world that we're in right now. So I'm going to just ask the question that I imagine every founder in the room is dying to hear the answer to. Obviously it's been a really interesting time the last couple of months in the VC space, or
a few weeks.
Weeks accelerate, weeks that feel like months. I don't know. There was a saying I remember at the beginning of the pandemic that somebody said there are months that are decades and there are weeks that are months. And anyway, it's been a time of high volatility in the public markets, that's trickling in and affecting the VC space. So, what have the conversations been like within the firm in the last couple of weeks? And what are you all talking about to the founders in your portfolio?
Well, a lot of what we did in the last couple of weeks are revisit what did we see in the 2000 crash? What did we see in 2008 crash? How long were those crashes? How low did it go? How long did it stay that way? How did the multiples compress? And then I think it's interesting, our multiples are compressing now, but we're not seeing revenue compressing or growth necessarily slowing down. But we have to believe it will. And I just don't know what that's going to look like. So we're just revisiting history a lot and trying to figure out what's what and what is it going to look more like on one end. And we do that mostly because, look, we're still going to make investments, but how we price them and how we fund them and when we think the next rounds will be, at what price they'll be, that's the part we kind of need to get right. And so that's why we're doing a lot of these exercises. You don't want to pay a price this week that's going to be like half off next week.
Yeah.
In general. So I think that's why you're seeing a lot of people wait to see like, where's the bottom. But I think for the most part, firms will be investing is just taking longer to get deals done as people are trying to think through what it looks like in a year or 2 years from now. We're talking a lot about our current portfolio. We did this exercise, who needs to raise between now and 3 to 6 months from now, right? Like, what are we going to do there? If funding does take longer or dries up or valuations compress a lot more, which companies are raising in the next 12 to 18 months? I would say they're in like the yellow category of like, let's see if we can extend the runway. Let's see, can we cut burn a bit? And then we have companies, luckily about a third of our portfolio that's like well capitalized beyond 2 years, and they're low burn, high margins, lots of money in the bank because they just raised a few months ago. So we're like, okay, preserve capital, stay efficient. And so, bucketing our portfolio companies and then figuring out how much they need if they're raising in the near term. And then also evaluating any companies that are in the M&A process. It's the likelihood that that happens because we're seeing a lot of M&A also stall and try to renegotiate price. So we're taking inventory and we're doing scenario planning, and we're spending the majority of our time on that. So I would say that the companies we do look at, most of investors are going to stay in their sweet spot, right? So I do enterprise SaaS. If someone comes with a developer tool company where if there's something cool about it, I may have taken the meeting in the past. Now I'm like, I don't have time to ramp up on this like thing I don't really invest in. So I'm only going to stay very focused in my lane and things I know like the back of my hand. But my appetite for going and investing internationally or doing something just out of my like very clear comfort zone is pretty much off the table.
Yeah. What advice do you have? Or thanks for sharing all of that, by the way. I think it's like very timely and interesting for founders to hear like what's happening on the other side of the table. So what do you have advice for founders who are looking to raise in the next couple of months? Like how do you suggest they navigate this space and time?
First and foremost, I think the days of FOMO investing or pressuring investors into FOMO are gone. I've had a few founders about 2-3 weeks ago that were like, we're starting our fundraise. We want to wrap up the process in 2 weeks. And I was like, all right, I'm out. Like, I'm not going to make this decision in 2 weeks. I know I'm not going to make this decision. So I'm just going to say I'm out now. And I'm not even going to open your data room. And then they came back like 2 days. They're like, well, what timeline does work? I'm like, well, you said I had 2 weeks and now I don't believe you anymore. So now it's no, absolutely not. So I would say, I think the better answer to what's your fundraise timeline is, I don't know. We are just starting the fundraise, or we started a few weeks ago or whatever it is. When we find an investor and terms we like, we will move forward, right? Which is like the honest truth. That means it could happen tomorrow or it could happen in 3 weeks from now. So if it's an area I like, I'm going to go through my process and take the time I need to get to decision, but I'm not going to sit around and wait either, because maybe they will get a term sheet from someone else. I don't know.
Yeah.
So I would just be transparent, realistic. If VCs, like I will ask founders like, well, I got a data room for like a Series C company. And I'm like, what valuation are they looking for? And they were like, well, I 2x from the last time I raised money. And I'm like, yep, I'm not going to do that price. Sorry, I'm out.
Yeah.
The right answer is like, the markets have corrected. I'm not sure. Let's talk through it. Right. Yeah. I understand that like there may be a 2x or 3x or 5x from last year, but 6 weeks ago, people are paying 100x ARR. Now they're paying 10 to 20x ARR. So unless you 20x, you're probably not even going to get a flat valuation. So I would say, set your expectations appropriately with where the multiples are. Mm-hmm. It sucks because I'm saying this to founders not in my portfolio, but for founders in my portfolio, I'm like, damn it. All my portfolios are going to do down, like not all of them, but the ones that are raising in the next like 3 to 6 months are going to have to look at a down round.
I was about to ask you. Yeah. Sorry. I was about to ask you about like bridge rounds. I think that's something that founders are also taking a look at. So what do you think about a bridge round as opposed to looking at that down round?
If you can do it, yeah. What some of my portfolio companies are doing is they're reopening the last round, or they're doing a convertible note at a discount to the next round, whatever price that may be. And we're opening it for strategics, small funds, folks like that. A big multi-stage fund like ours is very unlikely to do like a small check. We need to get ownership, so we have to do a round. But if you wanted to get a strategic or a bunch of angels or something or small funds that are like very squarely aligned with the space you're in, those folks are excited because they historically have like not been able to get in, like the cap table just never makes room for them. And now they have room. So you call them, they're going to be very excited. On the flip side, everybody's calling them now. So their bar is going up, they're inundated with volume when like 7 weeks ago, they were getting squeezed out of every cap table. Now they're like the belle at the ball. So expect some of that, but I think that's hopeful, and that should buy you 6 months to 12 months of runway if it's done right. Buying another 3 months of runway, you might as well just open a full round.
Okay, great. All good stuff. Thank you for letting us into your brain a little bit there.
Yeah,
I realized, yeah. Oh my God. And yeah, it's going to change in a week or two, right? Like the advice
it's already changed today. M&A process, like it was just M&A. Some of them folks are just pulling out entirely, which was not the case like 72 hours ago. M&A was like, yes, we get to buy all these companies that wouldn't call us. And now they're like, wait, everybody's calling us. Maybe we shouldn't buy any companies. And it's like, wait, what happened? That was 72 hours ago. You guys are all excited. So it's changing like every few days. It's just a different environment.
Yeah. I realized I forgot to kind of ask you specifically about NEA and about your investing. So let's like zoom out for a second. Can you tell us about the firm? Sorry, everyone. I know you did your research in advance, and I know that NEA is a huge name, highly regarded firm in the space, but yeah, tell us a little bit about the firm and, what do you all invest in?
Yeah.
What stages, any geographies, or kind of give us the high level.
Yeah, so NEA has been around for 40 plus years. So it's a storied firm. We've had, I think, more IPOs than any other firm in the Bay Area or in general in the VC world. We like to invest in the early stages. So Series A, Series B. We'll do very selectively Series C's and D's. We have had 18 funds. We're over 18 funds, not sure how the math works there. So we've had a lot of funds. We have a big LP group. So our last fund that we had officially announced was 3.6 billion. And so compared to how much capital we have, we're actually a pretty small and mighty team. So we have 2 investment teams, their healthcare investing team and our tech investing team. So health, it's like a different group of folks. We collaborate a bunch on stuff that crosses over, but they do like oncology, biopharma, life sciences, digital health, that kind of stuff. And then on our side, we have consumer and enterprise. I sit on the enterprise investing team. So about 75% of my time I spend on enterprise apps, and then about 25% on consumer. And then consumer, I do like things that someone like me would use or already uses. So a lot of parenting tech, women's digital health, fintech for underserved, that type of stuff. And I would say there's probably like 20, I'm not keeping up with the number here, but probably like 20 investors on the tech side. Mm-hmm. So we're relatively small compared to a lot of our peers that have the same size funds. Yeah, that's it about NEA. And then we have an office in the Bay Area, one in New York, DC. We invest internationally, but I would say the most of it is US based. Yeah.
Awesome. And then, I think you mentioned something just now around like, okay, some of the consumer investing you do is for people like you or things you might use. And I know out in the public sphere, you've talked about kind of this belief that women are remaking our economy. And this is a room full of predominantly women founders and investors. And, I think it would be interesting for us all to hear a little bit about your perspective on this. Like, why do you think that's important? How are you able to bring that into your work at NEA? And I don't know, is it hard to advocate for that within the firm? Do you find that pressure of being a woman and focusing on something that serves women to carry through to your investing?
I wouldn't say it's hard to advocate. I think, look, women, I think we're responsible for 2/3 of all spend in the US. So we control the wallet share, the majority of it. And so I think companies that are that understand how women buy, even if it's not just for women, but they just understand how women purchase and know how to target them is like a huge advantage. So on that front, I think that the most important thing for an investment thesis resonates where like it has to be a big market, the unit economics have to work out, and the competitive landscape and tailwinds need to be favorable for the startup to succeed. And then like we make that case no matter whether you're like a developer tool or like a wireless breast pump. And so it's the same set of criteria. I just think that as a woman, I'm more passionate and understand the nuances and able to translate that into that framework. On the flip side, like when they come pitch to me things that, when HIMSS came presented like erectile dysfunction, I'm like, I have no idea. You're telling me like, I don't get it. And I get to make one investment a year and it's not going to be this because like I care about other things a whole lot more. So that's why I think it's great to have diverse investors because the things I care about are different than some of the other people at the firm. And I'll be excited to push them through, or they're probably less excited to push them through. So look, I think, women starting companies, they're starting them in areas that are underserved and in areas most of the time that are huge markets. And so as long as the unit economics work out and you can recruit a good team and all of those things, then I think there's just so much opportunity.
Couldn't agree more. What are the types of, you just mentioned that you get to make one deal a year. And I think that's important for people to kind of hear and like, let that soak in. Can you talk a little bit about how many companies you evaluate in a year? How many deals do you see? And how do you go through that large number to find the one that you want to invest in?
Yeah. Well, it's 1 to 2. So like sometimes I'll invest in 2 companies a year, but that's max. And it's really subjective at the first pass. So there's like things I rule out to start off. So I don't do anything that has low margins or that is really high burn. And especially in this environment, I stick with like high margins, low burn companies. Is it a category I know? If it's like something very tangential to what I know, it's an automatic pass. So those are some of the very early filters, and then like growth and growth rate efficiency. And then once there's like, you pass that first set of like absolutes that I pass on, then what I look for big space. And it can't be like a big space in like 20 years from now. It needs to be a pretty decent sized chunk now, because that's what I'm underwriting. And then like the midterm needs to also be like compelling and reachable. And then the long term, I get it, I understand it, but that's not what I'm really underwriting. Mm-hmm. So the total addressable market in the near to midterm needs to be a decent size. By decent size, I mean like 5 billion, 10 billion. I look at the product. So that's why I do invest in seed sometimes, but it's post-product, probably like a few months post-launch, where I can see the product data. But I look at the product and then I look at product metrics. And what I look for is like, are people deriving value from this product in however it is that you're measuring it? And I will judge you on how you measure it. I look at in these, like some of the metrics there, or like how often is it used, or what's your churn look like, your upsell, all of those things. I look at customer acquisition costs, because that tells me, is this value proposition resonating quickly, or is it taking you a few tries to get the value proposition to resonate with your buyer? Because that means that CAC is higher, mm-hmm. Or customer acquisition costs are higher. I look for the founder space fit. Why is this founder going to win against the incumbents, against the competitors? Do they have the right background? Do they have the right team? Have they recruited really well? Are they great storytellers? Will they be able to raise not this round, but the next round and the round after and the round after that? Like, can they just fundraise for the next 15 years? Can they take this company public? Mm-hmm. We had a list of this, but it's been such a weird week. Besides product, founder, market, tailwinds. Tailwinds are really important. Mm-hmm. I've had a lot of companies that made a lot of mistakes, but they had such strong tailwinds that it didn't matter. And then I've had other companies that have executed flawlessly, but have had some headwinds, and it's so hard to watch. It's just feels so unfair. And so tailwinds will really carry you. And so I like to have tailwinds and not headwinds. Yeah, that's the gist of it.
I have a question about that last piece, if I can drill in. I'm really curious. Like, I think the other things you've mentioned seem readily measurable.
Yeah.
And the headwind tailwind question is really about kind of timing and I imagine some instinct. So how do you think about that? What do you go to inform what you think will be creating tailwind versus headwind for a company?
It really depends, but I'll give you a few examples. On the enterprise side, like if you're building something for on-prem deployments, it's like, well, everyone's moving to cloud or hybrid. So like focusing on on-prem is kind of a shrinking market. I'd rather you focus on like the transition to where people are going. There's some tailwinds in Snowflake and Databricks are allowing you to have like really affordable data lakes. So like you put all your data in one place. Before you'd have to put it in a lot of different places for cost savings, and then it made it really hard. But now it's all in one place. When all your data is in one place, there's really cool things you can do. So applications that are like capitalizing on everyone moving to Snowflake and Databricks, like tailwinds, right?
Yeah.
Other places for tailwinds like commerce tech, right? COVID accelerated traditional retailers revisiting their online strategies. More commerce companies were created during the pandemic, and that's still moving in that direction. So commerce tech is interesting. Climate tech is another one. There's like regulations can sometimes be a tailwind. So there may be some regulations or NASDAQ reporting requirements around ESG that then like, how are companies going to report on this? How are they going to measure these things? Tailwind, right?
Yeah.
And on the consumer side, I invested in a company called Greenlight, which was a debit card for kids. It's been tried a gazillion times before Greenlight, and it's failed a million times. But the difference was around the time Greenlight started, Roblox became huge for kids, and you can't spend physical cash in Roblox. And kids were getting iPads and iPhones at a much faster rate. So now kids are now wanting to spend digital currency. They had no way of doing that other than getting their own debit card. And parents were used to using Venmo, or like the millennial parents who were using Venmo and not carrying cash anymore. And so 10 years ago, it was easier to give your kid $5 and they would spend the $5 at the convenience store or whatever, ice cream store. Now, like parents don't have $5 in their pocket. They use Venmo for everything or their credit card. Kids are now wanting to spend on Roblox and Amazon and not necessarily a physical store. So Greenlight was like on the beginnings of all of those trends happening, and it just happened to be at the right place at the right time. So those are some tailwinds. But yeah, there's all kinds of tailwinds. There's all kinds of headwinds.
That's super helpful. Just hearing you like talk a little bit about how you think about that, and hopefully, it gives founders, and they're changing constantly. I see a follow-up question in the chat here around other ways that you're evaluating companies. So thinking about the metrics that companies are using to measure their value prop. And folks, throw your questions in the chat and I will weave them in with some of the prepared questions and ones you submitted in advance. I know Vanessa can handle it, but I think since we're talking about measurement, can you address that one?
So the reason I say like it's different depending on your value prop. So if you're saying like I built a couponing app and our goal, like our value prop is we're going to help consumers save 10% at stores or grocery stores or whatever. I want to see the metric of like how much you're saving people today, and how that's moved by cohort, right? And then how often people are using it. It doesn't have to be daily because I don't know, people shop daily, but if it's grocery store, it has to be weekly, right? So like how often are people opening the app on a weekly basis? But I'll start with like, what's your value prop? Sometimes engagement's the wrong metric. There was one founder that was like, I built a product for HR leaders to like automate this thing. And so they never have to worry about it again. And they showed me their like daily active, and they're like, it's really low, but we're going to get it up. I'm like, but wait, isn't your value prop like people set it and can forget it? So shouldn't there be like zero? Like if you did your job, they should just check on it like every quarter, every year. They shouldn't come every day, because then how is this different than what they're already doing today, or that they have to go in every day? And so they're like, oh yeah. And I'm like, what's your value prop? And then make sure the metric matches it. So if it's like, I save people all this time because of automation, then like how many automations are created per user per day, or per setup? How much time is it saving? That one's a little fuzzy to get to, but like how much reach does it have? How many dollar cost savings? Like I want to see whatever it is that your like ultimate value is. You have to measure it in some way. And then I want to see that like actually trending to being a thing. And it has to be more compelling than whatever it is they're doing today.
Awesome. Great explanation. Kimber agrees. Thanks. Good question, Kimber. So following this thread of kind of you as an investor, let's say you have a great meeting. What happens next? Can you talk us about kind of the process that you go through and a founder would go through with, a early, but later than a lot of the founders in the room, I imagine, firm?
Yeah. So I'll ask you for the deck and the data room. In the data room, I'm looking for, at the most basic, I want to see your cohort analysis. Like, are they retaining? Are they upselling? Like, how are the cohorts doing over time? Are they getting better? Are they getting worse? I want to see your CAC over time and your channels if you're a consumer. So how are you acquiring people? Is it getting more efficient, less efficient? What are you dependent on? Where are the risks there? I also want your P&L and projections, and I'll look to see if those are realistic. So if all of a sudden, if you're an enterprise SaaS and you're like, yeah, with like 10% more, I don't know, sales reps, I'm gonna like triple. I'm like, I don't know that I believe that. Or like, I'm gonna launch a TikTok channel and that's gonna drop my CAC by by 2/3. I'm like, I don't think I've ever seen that before. So I'll dig through your models and the assumptions that you're making to see if I agree with those assumptions or not. I'll also, I'll go through your data and see what you've put in there, how those things are performing. I'll do a quick check. So if it's consumer, I'll look at, we have a tool called Second Measure to see credit card spend on your company, see if like that's turning up or it's turning down. I'll look at like internet traffic to see like, is there more eyeballs coming to your website, less eyeballs? So I'll just do some external data checking. And then if it's consumer, I may build a survey to test like, what are people using today? Would they want something like this in the future? If you're enterprise, I'll call up some of our portfolio companies and say like, that I think are your target customers, and be like, hey, here's this website, what do you think? Would you buy this? Would you deploy it, etc. And if all of those things look promising, I'll start doing reference checks on the founders. They're like, I'll ask you for your references, but most of the time I like blast all of NEA. I'm like, does anyone have connections to anyone that knows this founder? And then everyone starts calling everyone. We'll find people you worked with like 10 years ago. We may find your like camp counselor. Like I've done reference checks with like all kinds of people. And just to get a sense of like, is this the biggest question is this person tenacious? Like, will they persevere? Would you recommend a friend to go work with this person, or would you go work for this person? That tests like, can they recruit? Do they deliver on promises? Like if they said they were going to do this project with you, submit the homework on time, whatever, but like, do they deliver? Because I need someone that can like come through on the things that they say they're going to get done. How do they deal with conflict? Do they avoid? Do they affront head on? Is it a combination of both? I asked them for advice. If you were going to work with this person, what advice do you have for me? That tells me a lot about like, can I work well with this founder? Because at the end of the day, I'm like hitching my wagon to this for the next 10 years. We joke internally, it's like more permanent than a marriage. And so I really need to get a 360 view of the founders. And if there's chemistry between us. So that's a bit of the process. If all of that checks out, it takes like a week if we're like hustling. and we will bring them back. So I'll write a memo and it's basically like, this is what the company does. This is the current market. This is the opportunity ahead of them. Here are the competitors. Here's how they stack rank. Here's why we think they will win against everybody else. Here's the multiples. So companies like them in the public markets are trading at 10, 20, 50x. We believe, and they're at a 5 billion, 20 billion, 50 billion market cap. If they're at a 1 billion market cap and there's only like 2 of them that exist that are public, that gets a little dicey. Our firm's like, well, why do you think they're going to IPO for more than 1 billion if the incumbents are only at 1 billion market cap? And if they're trading at 1x revenue, why do you think that they'll IPO and trade at 10x revenue? So how your incumbents are performing in the public markets does dictate how we think you'll perform in the public markets when you get there. I think there's one important thing, side note, is NEA is a huge fund. It's a $3.6 billion fund. The investments I make, I underwrite to $1 billion return for the fund, because we have to return 12 billion back to our LPs. That's like the GDP of like Jamaica or something. So like we have to return a lot of money with very few people. And so if I'm underwriting to $1 billion IPO, that means I have to own like 15 to 10, somewhere between 20 and 20% by the time you IPO. And that means you have to IPO for like 5 to 10 billion for the math to work out. So if I think you can only exit for $1 billion, that's just not going to, the model doesn't work for our business model. For smaller funds, that does work really, really well. Another fund like their company gets acquired for $1 billion, they're doing cartwheels. My company gets acquired for $1 billion. And I'm like, I have to explain why I didn't return enough back to the fund. So you also have to, based on like what your exit goal is, match with the right fund and fund size. So a lot of the scrutiny I get internally is like, why do we think they're going to win? And how big of an exit do we think it's going to be and why? So that's what I spend a lot of time with a partnership on, convincing them. And then we bring in the founders, they present, they get a lot of questions. We take a vote. If the partnership is generally excited, we can move forward and issue a term sheet. So that whole process takes the fastest week and a half, 2 weeks. Mm-hmm. Before the FOMO investing, it was like 4 to 5 weeks. Yeah.
I'm so glad that you highlighted some of those like fund economic pieces, because I think a lot of founders don't necessarily spend time to understand what the business model that you're operating in is. And it's really, really important. So thank you for illuminating that. I think it's super, super important. You were like, oh, this tangential thing. I'm like, oh no, I'm so glad you shared that. It's actually really, really important.
It is. There's so many times meeting with founders like, oh, this is such a cool company. And this investment's going to make money. It's going to probably return 200-300 million back, but like, that's not good enough for our fund. Dang it. I have to pass because like, I can't justify it, but I know I would make money if I invested in it. There's so many. There's like a diaper, Coterie is a diaper company. We use it. All my friends use those diapers. And so when the founder's like, hey, I'm raising money, I'm like, oh, I wish, but like your exit like multiple and size doesn't line up with what our fund would underwrite. So a lot of times I pass, not because I don't think it's gonna be successful and not because the founder will walk away with an exit and they'll make generational wealth for themselves and their family, but it wouldn't work out for us.
Yeah. Super. Yeah. Very interesting. And then, I guess why, we've been talking a lot about your perspective. What about NEA do you think is amazing? And why do you think founders should want you all on the cap table?
Because we work hard. Like the best way to say it is we just work hard and behind the scenes. I think, there's some founders that really want glitz and glamour and be on podcasts or be written into books or I don't know, whatever. And there's VCs that are Twitter famous or real life famous. And that's great. But I think as a founder, you have to understand that like VCs have a limited amount of time. If this VC is famous or writing books or doing all these things, that means like a huge chunk of their time is being spent on self-promotion, fund promotion, book tours, TV interviews, all of that stuff, and less with their companies. The founders you don't see, or the VCs you don't see all the time in podcast, TV interviews, book tours, all of that. You don't know them as well, but they're the ones that are actually like helping the founders day in and day out. And so in EA, we're not as, we're not a household name like some other funds might be, but the reason for that is because we're just doing a lot of work. We're just working our tails off for our founders. And it's not about us. Ultimately for us, it's about the founders. And so we want to highlight them in every opportunity and not necessarily ourselves, which aligns with like how I think is the right way to do this job. And the way you can tease a lot of that out too is founder references. I know if I'm up in a competitive deal and there's 10 other term sheets, if the founder calls my references, I know I'm going to win it, even if I'm not the highest price. If they don't call my references, like, I don't think I'm going to win it. So call references. References are everything.
Awesome. Yeah. And then there's a follow-up question here in the chat that's kind of like, how do you think founders can know upfront, kind of before getting to that stage of like, okay, there's a term sheet on the table. What should founders be doing to kind of diligence investors before getting to that point? Because ideally, they get into a conversation with you or another investor, and they already know that, or they have a strong hypothesis that they want you on the cap table. So what should founders be doing to research and get to know investors before that point?
You can asking for references is tough because like I have like 3 go-to references and 3 like backup references. But these are founders in my portfolio that are also super busy. And to take 30 minutes of their day to give a reference is a bit of an ask. And I don't like asking unless this is going to happen. And so, you can do back channel references, talk to founders that know us or know NEA. That's totally fair game. Asking for my references, I'll typically say like, well, I'll do that once we give you a term sheet and we know that we want to invest, or I'll do that if it's between us and someone else. But if you're talking to like 10 other investors and we're not at the top of your list, like please be considerate of our references. And I do the same for customer references. I don't like to call customers unless that's like, I am 90% sure we're going to get there. And unless your customer references says something like, I bought them because they're the cheapest thing I could find, that's a red flag. But most of the time they don't say that. They're like, we love it and we would die without it. And I'm like, okay, great. But I don't ask for your references, especially customer references, unless we're going to get there. And I hope founders do the same for us.
Yeah, cool. Folks, I think now is a good time to start dropping questions into the chat if you have more. And there's this last one that I think is really interesting. I think I guess from the part of the world that Graham and Walker sits in, we see a lot of founders building companies that have some sort of impact component. And this founder, it sounds like, wants to know how important is that to you at NEA, and what's your perspective on companies that have an ROI beyond just financial impact and financial return?
Yeah. So we don't invest in companies that have a negative impact on society. We actually, long story, but we didn't invest in Juul and we didn't want one of our companies to even get acquired by Juul, because we're like, if they acquire you, we're selling our position right away. So things that are harmful. So, and also our LP agreement doesn't allow us to invest in like tobacco, firearms, porn, alcohol, gambling, vices. We're not allowed to invest in those. But we also wouldn't invest in something that's going to make the environment worse. That's obvious right off the bat. Maybe sometimes there's like third, tertiary, or further down the road that we didn't know up front. For the most part, we try to do things that we'll be proud that we invested in. Personally, like if I'm going to make one investment a year, I'm not going to make an investment where I'm like embarrassed to tell my family about it. That's just like, it seems obvious, but it's very common practice at NEA. No one wants to be that person. But we can't invest in something that's going to make the world a better place and not have the 10x return, the $1 billion return, because we take money from LPs and they invest in us for a very specific return profile. And that's our product. And so if at the end of the day, I don't deliver that product back to my customers, they're not going to come back. And then like, we don't have a fund anymore. So I think it's important, like our returns and our returns profile, that's our product, that's our business. And so there are other funds, like there are family offices that don't care as much on the multiple of return or the IRR of return or the like exact, size of the return, that are very focused on social impact. Those would probably be a better fit if you don't think it's going to be like a 10x return or at least a few $100 million return.
Yeah. Great.
Yeah.
Yeah. Super helpful. Another question here is how much, you're a small team of 20, it sounds like. But it looks like Aisha's kind of wondering for, a big firm like yours, like how much of the experience is related to the partner that you're going to? Like, how different is it to go to Vanessa versus somebody else on the enterprise team?
Yeah, my team would probably kill me if I said it this way, but it's almost like a franchise. Like we all have like underlying same values, same principles. That's why we got hired together. That's why we stay working together and don't get fired or booted off the island. So for the most part, you'll get, my colleague, Aaron Jacobson, I'm probably a lot more social and outspoken than he is, but at the same time, like intellectually honest, really hardworking, wants to do the right thing, going for the same profile of companies in a different category than I am. So you'll get the same like underlying principles at NEA. And then you're also like, we have the same evaluation criteria for the company. So we'll rate all the companies with the same framework. So those things are pretty constant. The difference is like the chemistry, and that actually goes a really long way. As trivial as it sounds, like, well, you have to like have trust, you have to have just communication styles that gel well together, because we're going to be talking about a lot of things over the course of 10 years, some good, some bad, some in between. And you have to be able to build trust with that person. So at that point, I think the individual partner matters a lot. So it's both. I would probably weight it like 60% partner, 40% partnership. You can have a really nice person in a partnership that you really like, but their partnership is not as nice and very hostile or whatever. And then, you have like a great experience with your person, but the minute you like present to their partnership, you're like, who are these people? Why are they so mean? So you do come in contact with the whole firm. So you want to make sure that like you're aligned with their mode of operating, but the partners who you're there with day to day or week to week.
Okay. Yeah. All right. We probably have time for like another couple questions. I've got one coming into the chat. Interesting. Okay. All right. Let's see. Tara. I think we have some Graham and Walker resources that will be helpful to you. So we'll follow up on that question. We talked a lot about kind of, you as an investor. I want to hear a little bit more about Vanessa as a human, like what keeps you going, what motivates you, what inspires you, because it's not an easy job, right? I also heard that like this is a grind. There's a lot of pressure on you to make big decisions. So how do you keep going? What keeps you motivated?
I'm learning a lot on a daily basis. I think it's frustrating and interesting and exhilarating all at the same time. It's frustrating in the sense of like, I have an engineering background. I felt like if I could just study something, I would be able to perform. And like, give me a textbook, give me a bunch of like instruction manuals. I'll play with it around for a weekend. I'll be able to execute on Monday. And venture just feels like it has infinite edge cases. So I mean, at least once a week, a founder's like, hey, I'm running into this situation. Like, what should I do? And I'm like, I'll be right back. And then I like reach out to someone in the partnership who I think has seen something like this before. I'm like, hey, this founder asked me this question. I have no idea. What do I do? They're like, okay, well, in 1996, someone had this thing. And then, in 2008, someone saw something like this, and this is how we managed it. And this is what went well, and this is what didn't. More recently, I'm seeing this, and this is how we manage it. I'm like, great. I think I have a semblance of an answer. And then I run back. But it's frustrating me. I'm like, man, I'm 5.5 years in, and I still feel like I don't know enough about what I'm doing to have this job. The imposter syndrome is real. But I have amazing colleagues that help me navigate through that. And I learn a lot on a daily basis. And so that keeps me going. it sounds cheesy. The founders keep me going, my relationships, like the social pressure is the wrong word, but you form a really close bond with them. And so you want to do right by the founders. You want to help them navigate. I'm fair, I'm transparent. A lot of times, like sometimes I don't have good news, and that's fair too, but helping them navigate whatever it is that's ahead of them keeps me going. Yeah. And then what keeps me level-headed is my family. I have 2 kids, a 1-year-old and a 4-year-old. I have an amazing husband who's wildly supportive. And then fun fact, I have a horse, and I've had a horse my whole life. And I will get up really early, like 5:30 in the morning, and I'll go ride, and there'll be nobody there. And it's just me on like a few hundred acres. And that keeps me like leveled. If I haven't gone to the barn in a few days, I start getting really testy at home. So having that, like, nobody talk to me and you be outdoors with like animals in nature, like resets me. And I've been going to the barn a lot in the last few weeks. So really early mornings.
Interesting. Yeah. I love hearing about that. Yeah. So important to unwind and like find a balance to the pressure and high stakes. And
it's hard, honestly. Like, I'm going to work out. I'm going to do yoga. I've done yoga exactly once in the 10 years I've been in the Bay Area. I've probably worked out. My Peloton yells at me all the time, but I think I've done like 4 sessions so far this year. And so, because every time I'm like, okay, I have time to work out, but I have like 200 emails and someone, I'm like, Vanessa, ping, ping, ping. You haven't gotten back to me. Where are you? Ping, 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 ping. And it's like, all right, whatever. I'm not going to work out. I'm going to do this. But the nice thing about the horse is that I have to. She won't let anybody else ride her. So like, I don't go. It's almost like another kid. Like, I kind of have to. And so it is really hard to make time when the world's running at 100 miles an hour and it feels like everything's on fire, but finding some way to, like, I don't know, make it work.
Yeah. Okay. We are like just about out of time, but I think this question we should take. Do you want to meet founders that are kind of before your stage? And what does it look like to get to know founders before they're kind of ready for you to be, potential investor for them?
Yes. What typically happens is I meet a founder when they're raising their seed, and it'll be too early because it's pre-product, it's 1 month past launch, to whatever. Or there's something where I'm like, I don't think you have a good answer to your go-to-market or your competitive space, or I don't think what you're going after is a big enough space, but like, let's keep in touch. So I will, if I think the company is in a category that I'm really excited about and I want to do something at some point in that category, yes, I will take the meeting at the seed. I will hear the pitch. I will see what your goals are, what you're striving for, what you're building. And then we'll keep in touch at that point, because things change, or the founder's like, I just landed this customer at this price point. And so we'll stay in touch as things evolve. Or maybe they're like, I pivoted, this was too small, or this didn't work out, but I'm doing this now and I'm seeing traction. So we'll meet at a fundraise, because that's when they have their deck of like, these are things I want to accomplish, and this is how much money I need to accomplish those things. And then what typically happens is then by the time they get to the A, I've seen the evolution. I've seen the founder navigate all kinds of things, firing a co-founder, hiring a CTO, pivoting, firing their first customer, increasing their margins, whatever. I've seen like things happen and I've seen them navigate it. And then at the A, when they're like, hey, I think I'm gonna raise my A. I'm like, send me some numbers. And I'm like, shit, yes, let's raise your A. Let's do it. Pick me. But I typically won't meet with a founder where it's like, hey, I'm, maybe raising, maybe not raising, let's grab coffee. And I'm like, I meet with companies that are raising. I probably do somewhere on average between like 10 to 20 companies a week sometimes that are fundraising. So to make time to meet with someone that's not fundraising and then I don't really know what their targets are, where they're going, or what their economics, like I don't take those meetings.
Yeah. Great. Well, appreciate that transparency, and super helpful for people to know. I think everybody was like, Vanessa, you're so amazing. How do we meet you? But now we all know. Now you all know. Okay, we should probably wrap there. And Vanessa, thank you so much. This was very, very informative. I know we dug deep on things that may be farther along for some of the founders in the room, but I think it's really important. The reason that we had this conversation is, we want, obviously, you all to succeed in raising wherever you are. And then once you start raising, as Vanessa said, right, like you're on that path until you IPO and ideally at a very, very large multiple so that, you know, you can have Vanessa, if you're lucky, on your cap table. But it's important to know what's coming beyond the stages where you are. So Vanessa.
Well, I do want to take one question here that's really important. What does keeping in touch mean to a VC? The easiest thing you can say is, can I add you to my investor newsletter? That's super low touch, low everything. I do, when I say like, I mostly say yes, but I do read them. And if like, there's like not a lot of traction after 2 or 3, I like send it to a different folder. But if there's like, you know, we launched this new product, I'll click on the link and check it out. If you're like, we just landed these 2 awesome customers, I'll like look them up. If I know someone there, I'll call them and ask them like, hey, what do you think? Why'd you buy them? So I do like peruse them. I do like scan through. And if there's like interesting tidbits, I'll dig in a little bit further. If there's something really interesting, then I'll email you and be like, hey, I just saw you landed so-and-so. They're in our portfolio. They had great things to say. Let's chat. Let's catch up. So that could be a low friction way. If you don't do investor updates, and there's something like highly relevant, like you landed a company in my portfolio, or you like 3x to like, you know, a really impressive number, or you have like 300% retention year over year because you just finished your first year, or something like gnarly, cool, exciting, then just, you know, email that VC and be like, hey, I just crossed over this really exciting milestone. I thought you'd be interested. Do you want to catch up?
Awesome. Great tactical advice. Love it. Thank you. I'm glad you caught that question because I totally missed it. So cool. Well, everyone in the room, thank you for being here with us. Vanessa, thank you for sharing all of that. We at Graham and Walker do a lot of these conversations. We have a go-to-market strategy workshop coming up next week, actually. So if you're at that moment of, you know, trying to figure out how to get your product out there, you want the next step before you get to meet Vanessa, come join that workshop. It'll be with an investor from Georgian, and they're going to dig in on kind of how to understand where you play. How do you know where your sweet spot is? And that's super, super important. So we hope we will see you there next Wednesday at around noon. And we will share the recording out if you missed the beginning or missed the portion, or just want to go in and re-listen to all of the magic that Vanessa shared with us. You will have access to it. With that, I hope everyone has a great rest of your day. And Vanessa, thank you again for taking the time. It's great to have this conversation.
Thank you for having me. It was great seeing everyone and great questions. Thank you.
All right. Happy Thursday, everyone.